Welcome to episode 1580. Jonathan Gray, real estate private equity billionaire at age 52. 9 lessons. This is an outline of episode 1580, lesson 1 to 5. This is lesson 6 to 9. Lesson 1, most important job, deliver outstanding return.
I'd say we always remember that the most important part of the business is delivering great returns for our investors. It's not very complicated, right? One of the questions people ask is, how did you get to be so large? We got to be so big because we've delivered great returns. 17% net over 25 years to the investors in our global funds.
Lesson 2, big theme investing.
Decade ago and bought a shopping center. And I went out and I bought a last mile logistics, a warehouse just across the bridge in New Jersey. And I paid 10% more than anybody back then. It wouldn't have mattered, right? The shopping center today, unfortunately, is worth materially less. That last mile logistics asset's probably worth triple what it was back then. And so getting these big themes right, it doesn't mean you can pay any price, but it's really important to sort of fish in the right location.
3, you entered real estate when it was less prestigious.
About a year into the job, the real estate industry was coming out of a huge downturn. I was asked if I wanted to move into this startup division with no people or dedicated capital in a decidedly less prestigious industry. Again, a hidden gift.
Lesson 4, buy, not build.
Is ideal. Occasionally we'll build things, but in general, we like to try to get into real estate at a lower basis when it's already producing income. The problem with development is it's a bit like saying I'm going to IPO 3 years from now. When you show up to lease up your building, we could be in a different economic environment, and therefore you may not have tenants, you may not have revenue. So we've generally biased towards existing real estate.
Lesson 5, start small.
Actions were tiny in retrospect. A $6 million Virginia shopping center, an $11 million Colorado Springs hotel. But I was gaining confidence and skills.
Lesson 6, the importance of conviction.
So high conviction investing became my mantra post-crisis. It led us to buy 50,000 homes before the U.S. housing market recovered and to acquire over $50 billion of warehouses globally based on the explosive growth of online sales.
Lesson 7, buy undervalued public companies.
There were publicly traded real estate assets that were undervalued. And so he did, over the course of about a decade or more, almost 30 public to private transactions where he took real estate asset, took it private, Hilton being sort of the big example of that.
Yeah.
Lesson 8, fix up and manage to add higher return.
The idea of taking something that has some risk associating with it, fixing it up, leasing it out, and creating a more bond-like asset, you can generate outsized returns doing that.
Lesson 9, go where the creative minds are.
If I had one piece of advice, where geographically, is go where the creative and technology types are, because those are the markets where there'll be the most economic activity. So the West Coast of the United States, Austin, Texas, Cambridge, Shenzhen, London, Amsterdam, Tel Aviv, Bangalore. Tech is driving so much of the growth in this global economy. Those are the most interesting places to invest.
Thank you for watching. Please subscribe, leave your questions and comments below. Wishing everyone peace and prosperity.